Hello traders, welcome to this video where we're going to take a look at the inverted hammer candlestick pattern. So this is a bullish candlestick pattern that looks basically like an upside down hammer. Okay, so it's good to be aware of when this occurs on your charts because it can be used for potential entry and exit points. It can be used to confirm your trades or to avoid taking a particular trade. So I've found one here on the chart. As you can see, it's got long upper wick with a small body and little to no lower wick, looking like an upside down hammer, hence the name, inverted hammer candlestick pattern. And basically what it signifies is that the bulls are going to perhaps take control of the market and price will move up. Okay, I think personally the best place to look for this pattern is on a pullback in an existing trend. As you can see here, there's a nice support level that was formed and we are in an uptrend. Okay, so that's clearly visible there, and we've had a nice, the price has gone up, had a nice pullback towards this trend line, and the inverted hammer candlestick patterns there suggesting this is a good time perhaps to start looking for an entry. Had we taken that entry, you can see it would have been a good trade for at least nearly 70 odd pips. Good thing about this particular trade is we could have placed our stop loss just below the support level, which would have been really tight at around 5 pips, which is really good for the 1 hour chart time frame. This is a euro dollar 1 hour chart. You can look for these inverted hammer candlestick patterns on any trading instrument or chart time frame. Personally, I look at the 1 hour charts or above, 4 hour, even daily, because I just find that the signals tend to be more reliable just for the fact that there's more price data included within the candlesticks. I mean, if you found the inverted hammer candlestick pattern on a 5-minute chart, chances are it's not going to be as reliable simply because there's just not enough time or price accounted for there. So that's one way you can trade it, which is just to hop right in. I mean, I'd be more confident jumping in here straight away than I would have with perhaps this inverted hammer candlestick pattern down here, simply because the trend has already formed in the upwards direction. That being said, you could have taken this one blindly and still would have been a great trade, but more often than not, price will be stuck in a range. You can see here's another inverted hammer candlestick pattern. If you would have taken that one, you'd been maybe questioning your decision around here somewhere. So, which is, as they say, the trend is your friend. It's nice to just wait for the trend to form first before then taking the entry. If you want extra confirmation, this resistance level here, we could have waited for price to break through there instead of just entering. We've seen our inverted hammer candlestick pattern. We're confident that the market's going to continue upwards, so we're just going to wait for a breakout of that level, and boom, in the trade there, another nice opportunity. Could have placed a stop loss just below here, which again is a relatively tight stop loss, or you could have placed it on the other side of this resistance come support. Okay, so that's the basics of an inverted hammer candlestick pattern in a uptrend. Can of course use other indicators to confirm the trend or the strength of the trend. The ADX, this here, basically when the green line is above the red line in this indicator, it suggests that we're in an uptrend, and vice versa. For a downtrend, the red would be above the green. Also in the ADX, when this main line here is above, I like to mark the 20 level, just anything above there I consider is there's some momentum in the trend direction. So for example here, the green is above the red, the main line is above the 20, so there's good momentum on an uptrend here from my perspective, and you can see that's reflected in the chart there. So if we go back to where the inverted hammer occurred, okay, the ADX was saying perhaps hold off, but then we had the crossover there of the green and the red line, still above 20, showing that there's some momentum left in the move, and perhaps we could have looked to have, well, that would have been extra confirmation for this breakout here, or you could have just entered there if you were basing your entry on the ADX crossover perhaps. Either way, it's just good to be aware of what's going on with technical indicators, support and resistance, trend lines, price action, candlestick patterns, everything, rather than just relying on one form of analysis. And of course, good, sensible money management. I like to cut losing trades short and let winning trades run. For example, let's say we took an entry on the breakout here and had our stop loss just 10 pips below the support area there and the trend line. As price moved up, we could have then moved our stop loss to break even or break even plus some, perhaps close part of the position, took some profit, or just let the trade play out till we see this new level resistance forming and price starting to show some indecision. The ADX losing momentum. You can see the crossover to the downside there. Even there would have been signals perhaps it's time to exit. Yeah, so that's the basics of the inverted hammer candlestick pattern and a few different ways you can trade it. I think it's worth saying that there is a version of this for sell trades, but most people refer to it as a shooting star. So I'm going to do another separate video about that pattern, but for the purpose of this, we are looking for entry into buy trends. Okay, thanks for watching. Please like and subscribe for more.